Good morning and welcome to the ENTEQ Technologies PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Andrew Law, CEO, and David Still, CFO. Good morning to you both.
Morning. Good morning. Okay, so we'll take. So brief introduction to us both for any newcomers. So I'm Andrew Law. I'm the CEO. 25 plus years in the oil service sector in a variety of technical, operational, management, and also corporate finance roles. And David Steele, my colleague, is the CFO and has a wealth of experience in related industries, as well as being with ENTEQ for a number of years. So an overview of ENTEQ for anybody, the sector that we operate in, for anyone who is new to us. So we provide measurement, data, and control technologies for the directional drilling sector around the world. So in terms of the sector, we cover oil and gas, which is obviously where the most drilling is. In addition, we support the geothermal operations around the world, as well as some methane capture or methane abatement projects around the world. So in the pictorial we see there is some of the products that we offer. In this case, it's showing sort of horizontal drilling, where we cover from technologies from the bit, and that's our latest technology in terms of our rotary steerable, so we can control the direction of the well, as well as measurement, so understanding where we are within the well and the trajectory of the well, and as well as communications, so communications between technologies within the well and communications from the equipment in the well up to the rig and then on to the office, so that decisions can be made. So the key technologies we have are rotary steerable, which is the very exciting technology we're developing, and then also measurement while drilling. Cover the market size in terms of directional drilling around the world. For oil and gas, it's depending on which report you read, it's 10 to 13 billion per year in terms of that scale of market. And normally those reports, they don't always cover the geothermal and the methane abatement sector. So there's some smaller markets there that we also enter. In terms of the MWD systems, that's our core, that's our traditional business. And the niche there is that we make technology that can survive in high temperature and very rugged environments, and that's been our key selling point, and that's why we've been used in geothermal. And then the rotary steerable, that's a technology that we've been developing. It's a unique technology, the way we're doing it. So the rotary steerable market exists around the world, and that's a 2 billion market annually already. And we have a breakthrough, game-changing technology that we're introducing. Then the third point is connectivity. So helping systems communicate downhole. And one of the reasons we've got that in there is really to help our customers adopt our SABER rotary steerable when we introduce it. So in terms of how we're structured, we have a technology team. We have two divisions, MWD and rotary steerable. The engineering team and development team are based in Cheltenham in the UK, and the MWD is manufactured in Houston, Texas, where we have a very specialized manufacturing process facility for developing that high temperature, high ruggedized electronics. And our XXT technology has been essentially one of the industry standards around the world. So we have a very high established fleet and a strong network of customers, and those customers are essentially one of the first target markets for our SABER rotary steerable when we introduce that. We also have a number of distribution agreements so that we can then, we have, using our network and our reach with our customers, we can use those distribution agreements to add in additional technologies. So recently, in the last, certainly within the last year, and probably the last 6 months, we've established this our facility in Cheltenham. So it's a newly established facility, and that's where it's one of the global centres of knowledge and expertise for rotary steerable systems. Is the Cheltenham Gloucester area, and that's where some of the major companies have their own rotary steerable plants. So that's why we set up there. And then we have a network of sales persons for different regions around the world. So a brief introduction to SABER. So it's SABER stands for Steer at Bit ENTEQ Rotary, and it is, so like I say, there is an existing market for rotary steerables, and all other rotary steerables that are around and available on the market either normally use a pad or a piston to push against the formation. And the difference between this technology is a very unique, different technology that uses internal flow to be able to create a side force that we can then steer with. So it's a novel way, and this is something that Shell had developed. Shell had run it in field trials, and Shell they developed that technology up to the point in late 2019 when they were doing some rationalization of their business. And ENTEQ, we were very fortunate to be able to get the license for that, the exclusive license for that technology. So, the advantage of this tool is that in this system is we don't have pads or pistons, and that reduces capex, it reduces opex. So essentially, the life of the total cost of ownership during the life of the tool is reduced quite considerably. So that's why we're quite comfortable with that as a technology, because it has applications particularly even in a tightening market. The market oil price is high at the moment, but in a tight market, there's always a focus to drive efficiency and reduce costs. So this is something that the SABER tool can do. In addition to it, being lower cost to operate, it's simple, and that's the beauty of the system. It's a simple system to operate. And what ENTEQ have been doing, we've been doing a lot of work in refining that design and demonstrating all the good work that Shell has done and revalidating that work so that we're ready for launch soon. So let me there we go. So it is a game-changing concept, and here on the pictorial on the right with the red and the blue, that shows how the system works. So what we do is we are able to create using Benui, so the same thing that keeps airplanes in the sky. We're able to use that concept, that principle, to provide a side force and steer that bit, and that's what we've been refining. We've been refining two things. One is demonstrating that, and then the other is refining the control system. So we've done extensive testing to get that working. What we have been doing is simplifying and improving. I've done considerable improvements on the control system to essentially reduce development risk. We've used known systems, almost off-the-shelf components and assemblies to reduce the technical risk and use tried and tested technologies that are used downhole in similar systems. So, and what that's done is we've been able to increase the operating range of the tool. which gives it a wider application within the market. It also improves supply chain by using these off-the-shelf components. Well, like I mentioned on the communications piece, we've developed essentially a compatibility module that we can use to communicate with customers' existing fleet of MWD. So when we're marketing SABER to our customers, we can make it easy for them to buy. We can help optimize their fleet, and we can give them real-time data so they can essentially make real-time decisions whilst they're steering. Within the market, so within this 2 billion of rotary steerable market, it is essentially a duopoly. There's two main companies that do have a sort of the lion's share of that rotary steerable market, and that's one of the reasons why we're very keen on that market is that it's having a novel concept. So initially developed by Shell, we're very keen on. We know that there's room for competition, and we hear that from our customers. They are very keen around the world, not the US and other places around the world. They're very keen and/or very needing of a rotary steerable solution. So we know there's a market there, and we've done extensive engagement with customers and industry bodies around the world to prove up that demand, to generate that demand for SABER, and to introduce them to that SABER concept. So and you know there are different business models around depending on where we go in the world, but what we can say is, quite confidently, that there is a market wherever we go around the world. So there's definitely room for us there. And then we've got the total investment there, what we've invested in SABER. So a little summary on SABER. It's a simple system, lower operating cost, wider operating range. It's truly independent. Like I mentioned, there's two. It's a duopoly or a virtual duopoly of rotary steerables around the world. There's demand for an independent system, and particularly one that has other advantages. We have we have some field test partnerships in place that are moving from field test to commercial, and those are around the world. And one of the nice things about the business model for SABER is it is a normally rental model with ongoing rental, or with an ongoing support piece to it. So it tends to be quite a nice sort of sticky business model. And the other good thing about that is that model is already predefined. I mean, the industry is using that model already. So we're not trying to introduce a new business model. We're just trying to get into that market, which already exists and we have the advantage of having a lower cost to operate tool. And those, that kind of spares and support piece is obviously proprietary spares and support. So that's why we're quite keen on this model. There will be potentially some sales, but the main market will be rental. There potentially be some sales in particular countries, just depending on the mix, but the typical model would be a rental. The market is growing, and I should say something about the directional drilling market. I mean, there's a recent report out that shows that the directional drilling market is growing and forecast to grow through 2030. The key areas that the report noted were horizontal drilling, which is where we fit in, as well as onshore drilling, which is historically and will be our core market. Okay, so before I hand over to David, we've seen the markets In North America, we've obviously seen that strengthen in line with the rig count. We'll show you a graph on that in a minute. And what we've done internationally, we've developed 2 new customers in new geographies, new regions, and those, one thing I should say is that those customers that we are working with are also interested in working with us and helping us with the SABER project as well. China's been, and you can see that's the swing on international. But China has been slow. Obviously, it's fairly locked down still, and that's been driving that. But we've managed to get new customers in those new markets, ex-China. We've also been investing in SABER plus some other technologies as well. So we've not just SABER, we've got some other technologies that we've been developing for MWD, particularly for the high temperature. So when that does come through, when China opens up, that's a real market for that. And as we see, we've been working hard to reduce our overheads and preserve our cash. Okay. So in terms of there's a good example of the sort of steady, almost steady growth within North America, and that's where we've been obviously putting most of our business over the last year. What we would say is there's obviously when we come to it, there's already a good adoption of rotary steerable systems in North America. So it is a market that the rotary steerable has been proven, and that the rotary steerable market has been proven, and that's where we will introduce SABER. One of the things that's really when you see these 2 lines of oil price and rig count being very much in parallel, it's not a kind of complete unrestrained growth across the industry, and it's normally sort of dampened by some supply chain and personnel growth, and that's the industry's been seeing that. What I would say in this North American market, it's a very efficient market. It's very cost driven, so hence the need for cost-effective technologies. Mentioned China. I mean, there's still a focus on gas drilling when it unlocks, when it opens up. The Middle East has been is starting to recover, and that's normal. What we see in the Indian industry, and the US is normally much quicker to pick up, but there's still it's definitely a focus area for us. And then there's some I'll mention the 2 other countries there. Okay, I'll hand over to David.
Thank you, Andrew. So obviously starting with the income statement, as Andrew's already said, that the swing in revenue between the 2 years you can see on the screen was primarily much more focused towards North America and away from international, which we had a very strong China presence in up to March 21, and as Andrew said, they've come out of kind of COVID much slower. And also, as you can see from the H1, H2 split, the H2 was 5 million, and that's, we continue to see that in the first quarter of this year. So the key feature right at the bottom actually is the gross margin. As you can see, that's we've had quite a lot of margin erosion, and that's primarily because of, as Andrew mentioned, our growth in North America. And North America market is becoming increasingly commoditized, and they've been drilling primarily in the Permian for decades, so they know what's down there, they know how to do it, so they just want relatively kind of cheap and cheerful components to swap in and out of their tools. And our core product, the XXT, is not that. So that's why we've entered into these distribution arrangements with primarily North American-based component suppliers who can provide the lower temperature, lower cost solutions. And obviously that has the associated impact on the gross margin. The other impact is the percentage of our rental revenue. That was in the low 20% last year, and it's in the low teens this year. So there's a product mix impact, because obviously the rental is a very high margin. So because of the deterioration in the proportion, that's had the impact on the gross margin. So Andrew's kind of again mentioned the overheads. We're very cost conscious. And we've taken up effectively 10% out of the overheads. So yeah, pleasingly we have a positive adjusted EBITDA, even albeit somewhat small. Then below that line, the depreciation amortization, out of the 800,000, 500,000 is the depreciation on the MWD rental fleet. And what we're seeing towards the end of last financial year and has continued into this year is because the cash is flowing through the drilling sector. More and more of our customers have significant order books and therefore more confidence, so they have a bit more cash. They can go and finance and raise finance. And obviously, if you're renting from us, we tend to have very good long-term rental relationships. But if you've got a good order book, you'll come back to us and say, look, we'd like to buy the rental fleet, because in theory, we could call it back at any time. So the rental depreciation has tailed off, and going forward, because of the state of the market, we don't see the rental fleet growing in the MWD. SABER is a different issue, which we can come on to later. And then there's a bit of shrapnel at the bottom, and that's basically the P&L. So if we come to the balance sheet, obviously the key movement on that is out of cash and into intangibles. So you can see right at the top, the 4.1 million is primarily the SABER investment that we've been developing. So out of the 4.1, 3.8 is SABER. But as Andrew said, we've also developing the MWD higher temperature sensors, which we can offer into the market. As I said, that because of the North American dynamics, that primarily will be a international product. Anyway, so we continue to invest in the whole product range, not just SABER. The land and buildings, that's our 5-acre site, freehold site in South Houston. And then moving down, you can see, the rental fleet is very small at the moment. And as I said, it's not an area we see particularly growing. The debtors, trade receivables are up by 1 million. Again, that is a function of a very strong H2, but in particular, our quarter four. The February-March revenue was very high, and therefore you've got the associated debtors at the end of March, which obviously were unwinding as we see in this financial year. The inventories, for a $7 million turnover company, we do keep a high level of inventory, and that is tended to be one of our USPs. We do keep inventory on the shelf because we like to react quickly to a customer. So where other people are having supply chain issues, then we have had that stock on the shelf, so we can deliver kits very readily, should we say. And the last one is, the next one is the trade payables. That's gone up slightly as a function of the trading, as I said, in Q4. And then the cash, we've ended still with a fairly healthy $4.8 million. So the cash flow, we've kind of covered most of it. So we start with the adjusted EBITDA. The change in net working capital, that was primarily the million increase in the debtors, offset by the 0.4 in both inventory and creditors. So again, pleasingly, we have a positive operational cash generated, again, albeit somewhat small. We then have invested early on in the year into the rental fleet, but the big figure is the R&D expenditure, which again is primarily SABER. You see the MWD capex is virtually nothing, and that's why we've ended up with the 4.8 at the end of the year. So at this stage, I'll hand back to Andrew.
Okay, David. So locally, long term, we from what we see, and there's still a very solid oil and gas drilling market, and particularly gas. I mean, whichever model you look at, whichever scenario, we can see a strong gas drilling market around the world. In addition, we still see these energy transition support, and that be geothermal and other items, methane abatement, and our products, where we're focusing and what our products do is essentially drive efficiency across that operation, and drive efficiency as well as cost efficiency for our customers. So we're pretty we're pretty confident that and that's backed up by these market reports, that the drilling market is does have a pretty healthy long-term future, and that's what we're doing. I mean, we're moving, obviously, using our core base of MWD customers and presence to feed into the SABER, help the introduction of the SABER rotary steerable. We're confident and quite excited about the business model and the market. In that the market, there's room and not even room. There's demand from our customers for a new entrant, and that's our job, is to make sure that we can bring that commercialization of SABER into effect, and then essentially full scale rollout of SABER. So that's what we're looking forward to. So I think now is time for questions.
Andrew, David, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Andrew, David, as you can see, we received a number of pre-submitted questions and have received a number throughout today's event. Could I just please ask you to read out those questions and give responses where it is appropriate to do so, and then I'll pick up from you both at the end.
Right, okay, if I start off with the first one, obviously it's quite extensive, but basically the précis of question 1 is the growth rates that we put in the impairment test in note 6 in our preliminary statement. And just kind of put that in some sort of context. The impairment test figures are, obviously an accounting issue. We need to show that the future can support the current holding of our net assets. But the key issue is that the figures built into the impairment test are not those that are forecasts out in the marketplace. And the growth factors, we can see that very high growth factors in note 6, and they are being continually refined. They obviously were reasonable growth factors when we produced the impairment test, but as the testing continues, those growth factors will change inevitably, because we're heading towards commercialization, but we're not there. So the SABER revenue through to March 23 obviously are dependent on the internal factors, such as the ramp up of the rental fleet, which we are masters in our own destiny. We have sufficient internal cash to build up a significant SABER rental fleet, but also it's dependent on external factors, such as the acceptance of the unique SABER design into the marketplace. We know it works. Shell got it working. We've refined it since there, but there will be different field tests in different geographical areas, because obviously the geological conditions are different. So the timing of those field trials, we are very dependent on our field trial partners. So there's external factors as well as internal factors that could change those growth rates from the ones that we submitted in our prelims. And at the moment, the FinCap note doesn't have any 24 and 25 revenue figures, and that's because primarily We are still pre-commercial. We are still refining the product. Therefore, we're not quite the right stage, but obviously as soon as we have the success factors and the tick in the box, we'll be making the appropriate announcements and putting the appropriate forecasts out there. So hopefully that covers the first question.
Yeah, I mean, I think it's fair to say that there's a few scenarios, and it's about having a sort of making sure we put in a sort of moderated scenario, in that there could be some very interesting scenarios, and we don't want to kind of get too carried away on that one.
Yeah. Okay, moving on to the second question. Basically, I'll read out the first section. On the 7th of July 2021, you said that SABER is anticipated to be fully commercial by March 2022, and with some small-scale initial revenue before then. In the financial 22 finals, you said SABER remains on track for commercialization. Between those two statements, we heard only positive news. What caused the forecast commercial launch dates to slip? And can you talk us through the commercialization and the implication on the results? Well, I'll start off, and that obviously will come in as appropriate. But basically, we've done a lot of testing since July 2021, and the testing has been very encouraging. But what we've also taken this year doing, and the testing has indicated that we've had some design refinements. But as Andrew has already said on the presentation, the refinements have actually created a better tool. This tool can operate in a wider range of drilling environments, and therefore will be more appealing to prospective customers. So yes, there has been where we are now is somewhat different to where we envisaged we were going to be, but it's basically good news. We've taken the time to de-risk the project and actually have a better product to offer into the market.
Yeah, I think it's worth saying that on that, the product that we've ended up with, the engineering team are very happy with. So it's about what we've been doing is knocking away all of the what I would call physics risks, and working through and improving the engineering side of the tool. So what that means is ultimately making the decisions along the way to make sure we reduce the development risk overall, and we're confident we've done that. By making sure that we do generate the right steering forces, and that's the physics piece, and we've done extensive testing to demonstrate that. And then the second thing is around really making a very not only a sort of solid control system, but also something that can move into commercialization very well. And that's that whole piece about using off-the-shelf boards, off-the-shelf components, so that we can then get a really good commercial tool. So that's why we're quite excited by that. Yes, it's taken longer, but I think it's almost taken longer to go faster in a way. So I'm certainly very happy with the product.
And when it comes to the commercialization during 2022, we are still confident we will see revenue this calendar year. Now the structure is obviously, once we've got all the ticks in the box, which we're very close to doing, we'll be entering field trial agreements with potential customers. And as Andrew said, basically all our major MWD customers, both in North America and international, are very keen to take it and to test it. And the way that will work is we'll basically give them a kit box with 2 tools in. They go away and put it down the well and try it out for no cost. If it reaches certain performance criteria, which would be built into the field test agreement, they will effectively keep those 2 tools and start paying the daily charge and the redress fee that, again, Andrew's mentioned so far. So it's not as if we have to do field tests and then renegotiate. The way we have a very robust template already that leads kind of seamlessly from one to the other as soon as the performance criteria are reached. Now, field test with field test partners is great because it's it is relatively low cost to us, but we are very beholden on the scheduling of the field test partners.
Yeah, so I mean, we already have agreements that are essentially a field test to commercial agreements. So they're in place. We have field test plan in place where we have an option to use field test and another field test site if and when needed. And then, probably something worth mentioning is that the field test partners we have selected and are working with have fairly good broad control of their operations, so that we can actually introduce that tool. They have quite a lot of control about when they introduce that tool, which is a good thing. So they can slot it in to their operations without having to necessarily work with their end customer too much. So again, that's something we're quite positive on.
Yeah.
And I think that's something the team has done a good work on securing those agreements.
Yeah. Okay. So we're now on. Yes, a similar question 3 with the impairment test. I think I've actually covered that in the previous answer. Right. The next one. In the SABER webinar in March, you talked about looking to perform live directional drilling testing of the tool. If this has now taken place, can you give any color on how the tool has performed compared to the earlier, more theoretical testing? I'll hand over to Andrew just to give a bit more flesh on that one. Yeah,
so the first thing to say is remembering that Shell had actually done live drilling testing when they were working the project. So Shell had actually done downhole live drilling testing. So again, to demonstrate that the principle works. What we've done is we've worked on the control system and making sure we understand the fluid dynamics of at and around and inside the bit. And what the next stage, and that's the next key stage, is running our tool in a live drilling environment. So we've run the tool downhole in what we call passive mode, so demonstrate the control system. And that is the next stage, is to run the tool with the bit on the end, our version of the tool with the bit on the end. So it's about understanding the full situation where Shell had actually proved the concept. We've made quite a lot of improvements and design improvements along the way, and then it's about testing our version of the tool, so how's the tool performed? We've actually the side forces that we can demonstrate are more than enough, right? So more than adequate. So we're quite pleased with the level of steering force that we can generate, which again is the important thing. That's the physics thing that we're quite happy with.
Okay, the next question: what are the remaining steps to complete before first commercial sales of SABER? Will it be launched as a 175-degree tool or a 150-degree version? Will that be released commercially first? So I'll hand that back to Andrew.
So essentially it will be a 175 tool. We will probably, by nature of the field tests, we'll do it in lower temperature environments, or initially. So the initial version will be 150. The next version will be 175.
Right, next question. Can you comment on the FinCap full year 23 forecast of 10 million revenue, which seems to imply very little SABER revenue given the H2 22 performance, but 55% gross margin, which seems to imply material SABER contribution given the H2 margin of 35. It's kind of like the opposite effect of the deterioration in the margin that we've seen in through to March 22. So as SABER will be primarily a rental business, the gross margins will be high, shall we say, and therefore it will have a disproportionate impact on the overall gross margin. So obviously you don't need that much revenue at very high margins to bring the blended gross margin back up from what we saw last year at 36 up to the low 50s. So that's really where we are on that one. Right, next one. As regards SABER in rough terms, what do management pencil in conservatively for sales this year, if any, and next? And if all goes well, what revenues do you foresee in 2 to 3 years' time? Well, I think I've kind of covered the kind of near-term view of what potential revenue we've got in the next 3-6 months. Maybe Andrew, would you like to comment on revenues further out, 2 or 3 years' time?
Yeah, we have some scenarios, and there's a couple of other questions coming up, so I think we'll cover them all or as best we can. But yes, it's a 2 billion market. It's dominated by two main companies. There is room for an entrant. The market is growing, and there's a need for an independent solution in various parts of the world. So remembering, and I don't know if I covered this initially, but if in some parts of the world, if we're dealing with a local or a national domestic service company, drilling service company, they don't have access to a rotary steerable. I mean, there are very few options to be able to use a rotary steerable. So if they need to compete against larger multinational service companies in their own country, they need a rotary steerable to be able to compete. And that's where we can help them, and that's where there's a very interesting market there. And the multinationals are very obviously very protective of their business. So we're essentially, we can be an enabler to help those domestic and national companies grow. So going back to the market, it's a 2 billion market. There's room. I mean, we've got a number of different scenarios based on different percentages market share of that, and kind of couple that with our fleet build up. And the fleet, in terms of the tool being relatively simple, in terms of us scaling up, then yeah, I mean there's obviously a limitation, but it's certainly not a problem. It's a very realistic situation where we could scale up to a meaningful market share. So I obviously can't give you a number of the revenue, but I can say that the market can certainly tolerate having some increased competition, and there's room for us to get a meaningful market share that we would be happy with.
Right, next question. How do you expect the RSS incumbents to react to your commercial entry with a differentiated product at a lower price point? Could the incumbents realistically afford to slash their prices to try to keep you out? What would you do in response?
Yeah. Okay. Obviously, it's a public forum, so I've got to be somewhat careful about what I say. But you're right. I mean, there are, it depends. The short answer is it depends on the market. So in some markets, there is no RSS incumbent, and there's there's no slashing of prices in it. What we would be doing is helping enable those domestic companies with secure contracts. In some markets where there is an incumbent, it's normally broadly there is one incumbent, so there's one company. So yes, they could slash their prices. However, there is when you've got one supplier, even if they slash their prices, I think there's still room for entry of someone like ourselves, and it's particularly as we've got what promises to be a lower cost to operate tool or system. So I think that's why we're quite there's other things in there that it's more than just a rental model, and David mentioned a bit about it earlier. There's a rental model plus this kind of ongoing support, and that the ongoing support, supply consumables, provision of spares, consumables after each run. Again, that's something that we can come in and we can be pretty competitive on as well. So I think we're in a good position there.
Okay, so I think next one's for me. What gross margins are you targeting for SABER? The rental gross margin will be high. The actual cost of on the rental, is very low. It depends on who pays the freight. We can even possibly negotiate that the customer pays the freight to get the kit out there. So the actual rental stream will be significant gross margins, but we've also got this secondary income stream, which is this redress fee, the repair and maintenance, which we don't have with MWD. With MWD, you sell it or you even rent it, but now and again you get a bit of repair income, but that's it. With rotary steerable, because the market is well set to pay a certain day rate for rental, and it's also set to expect at the end of a drilling run, you take the tool out, you strip it down, and you replace it. With a pad and piston system, that is quite expensive because obviously there's a lot of wear on the pads and the pistons. Whereas with the SABER, going back to the diagram, it's basically just a solid collar. So there's no real wear on the outside apart from the expected wear on the collar itself. Inside, obviously, we just extract the components, and the way we've designed it and the way we've redesigned it to make it much more modular. So when we have, when it comes out for redress, we'll simply take a module A out and put a replacement module B in, A in, and therefore the turnaround will be much quicker. And also we'll have a redress fee for each run, which again, the customer is expecting, and our customer will then tend to charge that on to the final customer. And again, that structure of a rental and a redress fee is already out there. It's been out there for years. So we'll just be on the back of that. So we'll have a high rental margin and a not insignificant redress fee margin. I think that's the answer to that one. So the next question, what is the next significant milestone we should look out for on SABER? Over to you, Andrew.
Yep. So again, it covers will be when we do the downhole field trial with the bit on the end. That will be the first in the initial RNS that we'll be releasing.
Okay.
And that will be that's targeted. Obviously, in line with that, moving to commercial within a year, that will be that's anticipated this year.
Okay, next question. Given the slow commercialization of SABER, should I be concerned that you will need to raise more capital? If capital is needed, is that likely to be equity? If I start off on that one, we've addressed, yes, the commercialization has been pushed slightly to the right for very good reasons on this redesign and increasing the operating window for the tool. Raising capital, so no, we have not insignificant cash ourselves. We've also already have in place a $1 million overdraft facility with HSBC, which is predicated on getting orders for SABER. So as soon as we get an order for SABER, I can literally take that to the bank and start utilizing the additional 1 million overdraft facility. After that, it's all dependent on market uptake and how aggressive we want to be increasing the rental fleet. Obviously, being a listed company, that equity raise is a possibility, but at the moment we're confident we have enough internal resources and this overdraft facility. But if we need to raise money, it would be a very nice problem to have because it'll indicate that the market just wants more and more of our product. Anything to add, Andrew?
No, you've covered it well.
Okay. Right, next question. The license with Shell for the SABER technology, how many years is this license agreement? Have to be a little bit careful about what I say because obviously there's confidentiality. It is a significant fixed enough, and there's also clauses to extend. So we don't think that's a restriction, shall we say? The license with Shell. No. Next question. Would a competitor be interested in acquiring you? Have you been approached? Over to you, Andrew.
I think Obviously not, otherwise we'd have to have announced that. So obviously they haven't, because we would have to announce. But would they? I would hope that would be a possibility, more because that shows that we've got a technology that's working. But our base plan is run the business and develop a very good business, and that's our core and sole plan. And not getting distracted. We're not doing this for that end. We're doing it for our own, just to grow the business and grow the margins.
Okay, next question. Is there any patent protection for the SABER technology? The answer is yes. There's actually,
yes and yes.
Yes, there are two levels. So we have the initial patent protection that Shell spends a lot of time and a lot of money, actually being granted. So we have the exclusive rights to use that patent protection, which Shell, part of the agreement is they have to keep the patents current. But also, as and when we've developed a novel feature, and we have, we've significantly re-engineered the Shell design, we are applying and have applied for patent protection in our own name for these novel features. So as Andrew said, the answer is yes and yes. Next question, can you confirm the market size potential for SABER when commercial? What would be a reasonable market share to assume you can achieve in order to get a feel for the upside opportunity?
Yeah, I mean, we've covered a bit of the market, but yes, you can. We have a very varied scenarios, so running from small percentages through to well, where do you stop? So you can do the maths on a 5% of a 2 billion market. That's remembering that this is a low cost to operate tool, so it's not impossible that this could then kind of almost generate its own market as well. So it's in the you can do it incrementally on 1, 2, 3, 4, 5+%, and that would be absolutely possible with the right tool.
Yeah, and the SABER market worldwide is significantly larger than the MWD the pond we're fishing in at the moment. Okay, next question. What are your thoughts currently on the very long-term future of the company, 5 to 10 years out? Yeah.
Well, I mean, essentially a very strong SABER business underpinning additional technologies on top of that, both homegrown and inorganic. So we serving the main themes of oil, gas, geothermal, plus any energy transition technologies that we could do as well. So with the right technologies we can push that into CCUS. We can keep going on the methane abatement. So I think that's why we've got the sort of energy technologies theme, and we've got this measurement, data, and control theme. It gives us quite a broad, but focused. So broad markets but focused technologies. I think that kind of keeps us heading in that direction.
Okay. Next question. When do you expect to test downhole with a bit on the end?
Yeah. So again, I think we've covered that, but certainly by the end of the year. Well, by the end of the year, moving into commercial agreements, but certainly before the end of the year, that's for sure.
Right, that was the last question.
Yeah, that was, and Andrew, David, thank you very much for that. I think you managed to get through all those questions, and of course the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Andrew, could I just ask you for a few closing comments?
No, look, I appreciate the time, appreciate the thorough questions, so I very much appreciate that engagement. We're very excited and keen on the forward path here. So we look forward to getting back in touch soon with some good news on our good system and good technologies. So we look forward to meeting with you soon. Thank you.
Andrew, David, thank you very much for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of ENTEQ Technologies PLC, we'd like to thank you for attending today's presentation, and good morning to you all.